Hey guys, what's up? How's it going? Robin here. Welcome back to the channel once again. And inside today's video, I'm going to be showing you guys the Canadian stocks I'm going to be selling and as well as some Canadian stocks I'm going to be buying for today. So if you guys enjoyed this video, like most of my videos, please be sure to give it a big thumbs up and remember to subscribe to the channel if you guys want to follow alongside with me as I build up my dividend portfolio and if you guys want to see more Canadian-based investing content. So the first thing we're going to do is we're going to jump inside the portfolio. I'll give you guys an update on how our entire Canadian-based dividend stock portfolio is doing, and then we'll jump in and I'll show you guys what stocks I'm looking at to buy for this week. Alright guys, so we're inside my TFSA on Wealthsimple Trade, and I'm currently transferring some of my, in the past couple videos, I sold a bunch of my REIT stocks, so I'm going to be transferring them from my personal account inside my TFSA, so that's still kind of in the works right now. But here's our TFSA account that I have in Wealthsimple Trade that's predominantly full of Canadian stocks here, and we are currently have a portfolio total of $7,823. We are up 11% in the past month, which is $806. Over the past day, since this morning, we are down about, it looks like we're down about negative $25. So the stock market opened up today at a bit of a drop, but it looks like it's kind of recovering as the day goes on. And once again, in the past week, we are up 1%. So the stock market went up in the past week. In the past month, our Canadian stocks are up 11%. And then all time, our stock portfolio is up 10%. So we've been doing pretty good. And just to give you guys a quick little recap, if you're brand new to the channel, we started building this portfolio way back in the beginning of this year. It was actually literally January 2020 that we started, and then you guys can see the little dip in March, and then we just kind of basically been recovering since, and then we got some pretty big spikes here when the Canadian market kind of caught up to the rest of the stock market. So that's basically how the stock portfolio has been doing for the past little while. So here's some of the stocks inside my portfolio, and I'll give you guys a quick little update on some of these ones here. So we have Algonquin, we have Enbridge, we have Fortis, we have H&R REIT, we have Manulife, we have RioCan, we have TransAlta Renewables. Actually, the last video I did yesterday, I kind of did a more in-depth analysis on some of the stocks that I'm holding. So if you guys want to see in more detail and why I hold these stocks, check that video out. Because in today's video, I'm going to mostly be focused on stocks I'm going to be buying and selling. So if we go down towards the bottom of the portfolio, you'll see here that I have a bunch of random ETFs. And I bought these ETFs back when I first started investing, and I wasn't really sure what I was really doing, and there's nothing wrong with buying ETFs, but I kind of made the mistake of just buying a bunch of ETFs, and I didn't pay attention to the fees and whatnot, and I didn't pay attention to the fact that a lot of these ETFs kind of overlap each other, and it can just cause a little bit of confusion. And it's like, if you don't need to be holding them, there's no really a point in having them, right? And some of the companies inside some of these ETFs I wanted to buy individually, so there wasn't really a point of having all these different ETFs that kind of just don't really make much sense. So I've been looking to kind of sell them as they've kind of gone up in the market, so I can get at least a bit of a return. Then I can take that money and kind of more concentrate it somewhere else in individual stocks that I think are better buys, basically, so to speak. I still think ETF investing and buying index funds and having that the bulk of your portfolio is a great idea, and that is something I'm going to be doing. But I just want to move away from having all these different ones randomly kind of thing. So one of the ones I'm looking at today is a ZWC, which is a Bank of Montreal Canadian High Dividend Covered Call ETF, and this is basically just a Canadian bank fund, and it is by no means a bad ETF. If we go over the past year, we can see that it dipped down like anything in the market, but it's recovered nicely, and our return has been pretty good. If we look at the return for this ETF, we are up about 10%, 11% since we started buying it, and it's been performed quite well. And it's basically an ETF that holds all the big banks in Canada. That's pretty much the bulk of the ETF, and it's a great ETF. The only problem with the ETF is that it's, once again, I hold a lot of these bank stocks in some different ETFs, and I just think I don't need to have all of them. So what I want to do today is I want to sell these shares. We have a total value of $196, and like I said, we're up 11%. So honestly, I'm just kind of gives me a reason to get rid of it, right? We could hold it, but I just want to get rid of it because what I want to do is I want to sell this ETF, and then I want to buy it and concentrate on one particular bank. So that's what we're going to do in today's video. So we're going to sell these shares today. We have 12 shares. We'll go through these here really quickly, and we'll initiate the trade just to sell them and get rid of them, because now I can finally get rid of that ETF, and it's done pretty well. I don't think it's, once again, I don't think it's a bad ETF. I want to get rid of some of these ETFs and concentrate more on some individual stocks and keep maybe one or two big ETFs, and that's it, that are a little bit more diversified, because I do have a lot of finance stocks and whatnot, and I do understand that. So we sold that ETF, that's gone, and now the main ETFs we have are XRE, which I'm probably going to get rid of eventually, XHD, which I'm going to get rid of, same with VYMI, and the two ones I'm going to hold are going to be VDY, and I think I'm going to hold, eventually going to buy VFV, which is a US based fund, and I think those are the two ETFs eventually going into New Year I kind of want to focus on. But what I'm going to be doing, one of the bank stocks I want to focus on today is TD. So TD is my favorite bank stock, and the reason why is because it's the it's one of the biggest banks in Canada. They have the most earnings, and they just keep growing. If we go year over year, we can see that they've recovered from the pandemic quite well. So if there is like another lockdown or something like that, or if that happens, we can see that they're going to recover, and they're still down about 3% year over year, which isn't that much. I will say that they were a better buy earlier this year for sure, but I still think they're a good buy because the Canadian banks will just keep growing. You know, TD has a history of over the past couple decades actually of strong stock appreciation, strong dividend growth, and they're really consistent with everything. And I think it's just a really good buy. So TD currently trades at $70.85 Canadian. It does trade under the ticker TD for you guys who are interested. And I currently own about 15 shares inside my portfolio, which is about $1,000, and an all-time performance is almost 11%. So I think this is really solid from this bank, and all those shares we bought earlier this year are just going to keep growing and do really, really well going into the future. So we're going to be buying, I think, if it trades for $70, I think I'm going to be buying about 2 shares today. We'll buy two shares of TD for $141. I'm just going to put those in since it is kind of climbing up for the rest of the day. So I'm just going to put them in so we can buy them right away. And we'll buy 2 shares of TD, and there's one more stock I want to buy for today, and I want to talk about it specifically because it is a stock that actually a lot of people have been talking about over the past couple days, and that is, we'll see if we can find it inside my portfolio here, is RioCan. So RioCan is very interesting because there's been a lot of news around RioCan, and that's because they cut their dividend, and then the dividend will get cut going into, I think it's February or January. I think it was January because they do their distributions like one month behind. So I think they're cut their dividend in February, but it'll be the January payout if I remember correctly. Now, I bought lots of RioCan throughout the market crash inside my REIT portfolio, but I sold all my REITs. But if you guys want to check out some previous videos, I was sitting at like a plus gain of 17% with RioCan. So when their dividend kind of got announced, I wasn't too worried about it because I still think it's a really good buy. You know, if you go over the past year, RioCan, I talk about this so many times, RioCan is down so much. And I'm not buying RioCan so much for the dividend yield right now, even though the dividend yield after the cut is still like 4 to 5%, which is still a pretty conservative, decent dividend yield. It's still down 36%, and I'm buying RioCan for the growth that's going to happen over the next year or two. That's why I'm buying it, and I think plus if you add in that dividend yield in there, you could get some pretty solid returns over RioCan over the next couple years. And if we look at their history, they've just done pretty well. Like, they've been a pretty consistent stock. When they did crash back in, I think it was 2008, when the financial crisis happened, they like dipped down and then recovered really well. So I think they will recover eventually. And this dividend cut, it kind of makes a more security in the company. So if they're ever going to increase their stock price, or if that stock price is ever going to recover, now it's got a better chance of doing it. And I think going over the next little while, like that's just what I'm looking for. I'm not so much care about the dividend yield. It sucks, yes, but I mean, I'd rather see that stock appreciation grow because you'll just make so much more money. So that's my goal with RioCan right now. And I think that's why it's still a good buy. So we have $52 to trade inside our TFSA, and we have $17. Looks like RioCan's trading for $17. Now, I bought these shares over the past couple days inside my TFSA, so obviously we don't see that 17% growth, but that's because I sold them in my previous portfolio when I bought them earlier this year when the price was like super down, and we had that dividend growth kind of help, you know, to grow by a month-by-month basis. So right now we bought these shares over the past couple weeks, so because we're moving it into my TFSA for long-term growth, and we're going to buy about, it looks like we can probably buy about 2 shares today. So put about 2 shares in here, and looks like they're going up 2 for the day. So I'm just going to submit this trade in right away. So I don't know if we can do 3. Looks like 52. We can do 3 shares. So I think we're going to buy 3 shares, and I think we're going to leave it at that. We're going to place that order in, and it looks like the market is on its way back up today. So hopefully we can see some growth by the end of the day. But if not, it doesn't matter. I can still buy stocks at a cheap price. So that's it for today's video, guys. I hope you guys enjoyed it. Once again, you know, here's the REIT portfolio for any of you guys who are wondering. And as you guys can see, our REITs are up about, if we go all time, our REITs are up like 20%, which is absolutely crazy. So they did quite well. But like I mentioned earlier, you know, I sold them all and we're just waiting for the money to be transferred. And then we'll take this $5,000 and transfer it into my TFSA. And then I'll buy some more REITs back, and I'm going to buy some other stocks with that well. So that video will probably come up sometime this week, hopefully, if everything gets done in time, kind of thing. Unfortunately, it takes a little while to transfer funds with Wealthsimple Trade, but once that transfer goes through, I'll be doing a big video. We'll buy a bunch of stocks with that money, and then that'll be added into our TFSA here. And we might it might put us to about like 17,000 or so, maybe 20,000. We can help use up some of that contribution room before the end of the year. So hope you guys enjoyed this video, and that's going to be it for today. Let me know what you guys think in the comment section. Let me know what Canadian stocks you guys are buying, and let me know what you guys think of the stocks I bought today. If you guys enjoyed the video, please sure to give it a big thumbs up. And remember to subscribe if you guys want more Canadian content. I'll link to some of the previous videos I did in an end screen. You guys can click that link if you guys want to watch more videos. But other than that, guys, I hope you guys enjoyed the video. Take care and have yourself a good day.